Welcome to Weekly Wrap. This is Daily Wall Street. Grab your coffee. We're diving into everything that shook the markets this week, so you don't have to. This week, the stock market rode a wild roller coaster, from a brief rebound early onto a gloomy slide on Friday, thanks to the notorious quadruple witching day. The S&P 500 closed down 0.22%, the Nasdaq dropped 0.33%, and the Dow barely moved, dipping 0.03%. Market fear remains sky-high, with the VIX climbing to 20.57 and CNN's Fear and Greed Index stuck in extreme fear all week. Friday's quadruple witching expired nearly $4.5 trillion worth of derivatives, triggering sharp volatility across equities. But it wasn't just options magic driving markets. Let's talk Fed. On Wednesday, the FOMC left rates unchanged, as expected. However, they raised inflation forecasts and lowered growth expectations. Cue the music for stagflation fears. Fed Chair Jerome Powell didn't offer clear signs on rate cuts, leaving investors guessing and markets jittery. Meanwhile, Donald Trump fired up the tariff machine. New reciprocal tariffs kick in April alongside industry-specific levies. He also invoked the Defense Production Act to boost U.S. mining output, aiming to reduce foreign reliance, but potentially pushing corporate costs even higher. Wall Street is officially nervous. J.P. Morgan raised its U.S. recession odds to 40%, Moody's to 35%, and Larry Summers is throwing a 50% chance out there. Yikes. Let's pivot to tech, because Nvidia sure gave us a show. At its GTC event, CEO Jensen Huang unveiled Blackwell Ultra chips, Rubin platforms, and a bold AI vision: 100x more compute demand by 2028. Oh, and they've already sold over 3 million AI GPUs this year. Not bad. Meanwhile, Tesla had a bumpy ride. Early week downgrades dragged it down, but Elon Musk fired back with some Optimus robot hype. He aims to build 5,000 humanoid robots this year, and Tesla also got the green light to pilot a rideshare service for employees in California. Micron lit up earnings season with a 38% jump in revenue and strong forward guidance. Hello, HBM and AI memory demand. But not everyone's winning. Nike warned of future revenue drops, citing tariffs and a shaky consumer outlook. FedEx missed expectations and slashed its full-year forecast, raising fresh economic concerns. As for commodity markets, investors rushed to safety. Gold soared to a record high above $38 an ounce, up for 8 straight sessions. Oil prices rose too, fueled by Middle East tensions and fresh U.S. sanctions on Iran. Copper spiked 28% on tariff fears and stockpiling by importers. It even crossed $10,000 per ton before pulling back. Treasury yields dropped, with the 10-year falling to 4.22%. Investors clearly seeking shelter. Looking ahead to next week, all eyes are on February's core PCE data, the Fed's favorite inflation metric. Also, the countdown to April 2nd begins. Will Trump actually pull the tariff trigger? Or is it all bluff? If the S&P 500 ends next Friday in the green, it could finally break a 4-week losing streak. No pressure. That's it for this week's market wrap. If you enjoy these weekend rundowns, give us a like, subscribe, and drop a comment about what caught your eye. See you Monday.